What's driving markets? Welcome to Market Take. Each week, we'll bring you our insights of the latest market and economic trends that are impacting investments. I'm your host, Valerie Chan, investment strategist at the BlackRock Investment Institute. This week, we unpack how Japan best illustrates the latest development in global interest rates reset and why selectivity is key. The major repricing of Federal Reserve policy expectations over the last 6 months has reverberated well beyond US markets. Japan best illustrates this latest development. The major repricing of Fed policy expectations over the last 6 months has reverberated well beyond US markets. In Japan, it has put pressure on the Bank of Japan's gradual policy normalization, with government bond yields climbing to multi-decade highs even as the yen has weakened. Japan's domestic backdrop, including rising inflation expectations, concerns over fiscal expansion, has amplified that move. Higher interest rates have created a stronger environment for durable income. But not all income is equal. The key question is whether investors are being adequately compensated for the risk they take. Higher yields have also changed the role of long-term government bonds. More uncertainty about inflation, higher government borrowing, and rising term premium mean they no longer provide the same reliable ballast during risk-off episodes. The result? Investors now have far more options for generating income than they did just a few years ago. We favor areas where we think investors are best compensated for risk. Within government debt, that means the front end and belly of the US and European yield curves, along with selected local currency emerging market debt, where fundamentals have improved. Beyond government debt, we favor selected investment-grade credit, higher quality high yield, and direct lending. In Japan, we continue to prefer equities over government bonds as the economy emerges from decades of deflation and the Bank of Japan gradually normalizes policy. Here's our market take. Higher interest rates are creating a stronger environment for durable income. We think focusing on areas where investors are best compensated for the risk they take is key.
This content is for informational purposes only and is not an offer or a solicitation. Reliance upon information in this material is at the sole discretion of the listener. In the UK and non-European Economic Area countries, this is authorised and regulated by the Financial Conduct Authority. In the European Economic Area, this is authorised and regulated by the Netherlands Authority for the Financial Markets. Reference to the names of each company mentioned in this communication is merely for explaining the investment strategy and should not be construed as investment advice or investment recommendation of those companies. For full disclosures, go to blackrock.com/corporate/compliance/bid-disclosures.